across to what Union Commerce Minister Piyush Goyal said, because it is perhaps going to have an impact on the markets tomorrow. So there are a couple of things that are clear, Nivedna. First things first is the fact that the government's priority is to, of course, protect national interest, to protect farmers in the MSME community. Right. And of course, the fact that India is committed to protecting its national interest, and which is why it's also striking deals with several other countries, including the UAE. We've also decided to have an FTA going on with Maldives. We also have a deal recently signed with UK, Australia, and several other countries. So, of course, the messaging that is coming out of the government is that India is committed to finishing these deals, to execute these deals. Ladies and gentlemen, on that note, let me welcome our stellar panel of guests this evening who's joining us on the show. Joining us is Sunil Subramanian. He's the market expert, and of course, Jonathan Schlissel. He's the Deputy CIO, Westminster Asset Management. Thank you very much, gentlemen, for joining us this evening on ETNOW. I was just talking about Minister Goyal's speech that India will never compromise on its interests. Sunil, so what is the kind of an impact that you're anticipating when markets open tomorrow? Has that speech reassured investors on what's to come?
I think so. I think the maturity of both the Indian reaction through the press release as well as Mr. Goyal's comments indicate that we are not reacting to the words of Mr. Trump, which sounded very provocative. We are not getting into a jingoistic mood saying, why can he do that? At the same time, we are sticking to the facts that there have been multiple 5 rounds of talks and 1 more round of talk. We also, I think, spelled out the position, and I think what's probably becoming increasingly clear in hindsight today is that India's stance hasn't changed from day one, and America's stance hasn't changed from day one. That's why there have been 5 rounds without any success, because the red lines for us in terms of agriculture, dairy, and genetically modified foods have been there right from the beginning. And for the US, right, clearly they were looking for India's market opening up. And as you know, India is a very polarized market. We are the largest middle class in the world, just ahead of China. But 10% of our population counts for 60% of our national income. So it's a very polarized market. So the high-end products which America, we were willing to open up, a Harley-Davidson bike, a Tesla, or a high-end, liquor, those were accessible only to 10% of the 150 crore people. That's only a 15 crore market. But US clearly wants the big share of the pie, which is where agriculture was very important. So I think both the teams have been very clear from day one, and not much progress. Probably they've been nibbling around the edges so far. So it was clear that Mr. Trump's tweet was driven by the fact that with only a couple of days to go for 1st of April, nothing much had moved. Talks are going on. It's a good sign because they are willing to talk, but clearly from India's being a democracy and the political landscape with majority of the population living on farming as a subsistence, it's very, very hard, and it's a red line. So I think that it's not going to be easy to form a solution, but it's good that the government has responded by saying that we'll get back to the table and talk. And they drew attention to the fact that with the UK, we have been able to achieve some kind of an agreement, and that's the lighthouse around which we would seek future agreements, including with USA. So I think that's been pretty clear. So I think the question that you asked, is it going to calm the waters? Yes, because they also said they're going to be consulting with Indian export sectors to understand. So they're clear that they don't want any sector to be harmed, and they want to carry everybody along with them. So I think a very mature and very pragmatic approach which we have adopted. I think that indicates that things could be kept in abeyance. And Mr. Trump also subsequently seems to have kind of retracted by saying that talks are going on. So let's see. So clearly there is a window open there too. So I think on and on, I think it was good that he came to Parliament and addressed the Parliament, which is very important because the opposition had latched onto Mr. Trump's tweets and started piling onto the government in a way. So I think all in all, a very mature and well-handled situation is my take on this.
All right, Sunil, as you make that opening remark in terms of the fact that how we're looking at this in terms of the response as well has been mature, but more importantly, we'll get talking on the other aspects of how you've said red line, sensitive sectors as well. But before I come back to you, let me take in a word in from Jonathan. Jonathan, thank you also for joining us this evening. But let me ask you this, is this uncertainty in the markets short term or will extend over a period of time, given that we don't know if these secondary tariffs will in fact get the ratification of Congress?
Yeah, good evening. I think, yeah, it's very interesting. I think my take, I totally agree with what's just been talked about. But my take also would be the market, I think at the moment, is dismissing a lot of these tweets and a lot of this talk as mere bargaining chips. And therefore, they're looking through that. And obviously, there's a lot of uncertainty still. There always is with these trade negotiations with the US at the moment. But yeah, I mean, I think I take it the market's pretty sanguine and is looking through a lot of the bluster, and hopefully, with the talking that's still going on, some sort of a deal can be hammered out.
Right, Jonathan, and that really is the expectation that perhaps some sort of a deal could be hammered out given Donald Trump's commentary, last night's commentary versus a couple of hours later, and that's essentially what he hinted at, that negotiations between both the sides are currently going on. But let me bring in you, Sunil. The Indian markets, when they opened, there was absolute, red. There was a sea of red across markets. So what really changed after a while? Because we did see pockets of green. So how did that investor sentiment change? What really explains that?
So I think 2-3 things here. First is this happened overnight. So obviously there was a lot of retail players who were panicking and selling down on export-oriented sectors like textiles and the like, right? That is what started it off. But also remember, it was an expiry day. And as the expiry day panned out, I suspect that because the FIs had been consistently selling, I think there was some element of shorting in the market. So somewhat of short covering because of expiry day came in and started supporting the market. And the third aspect is that I think FIs have been selling right through the month. So I think they probably had an inkling that the BTA is not really going India's way. And there were other factors around the FIS selling, which was China looking very good from a valuation and a growth upgrade perspective. I think China's growth is now projected to sharp up to 4.8. And the second, that in the US also, the interest rates continue to remain high because Fed's avoiding any talk of a rate cut. And so debt in the US becomes an alternative option. So it gives these set of circumstances which have made FIs sell. So probably an incremental selling today consequent to the Trump tweet was not that elevated. That also contributed. And finally speaking, right, I think that domestic institutional investors, right, they always see they are sitting on surplus liquidity. At last count, there about 5.5% of even the mutual fund assets under management is the cash lying on the balance sheet, and that's on a 45 lakh crore base. So to that extent, there is money in the hands of the domestic mutual funds and other players, and such corrections which are panicky are the ideal buying opportunities for them, because as you know, the Indian market, because of domestic buying support, hasn't become cheap at all. Despite the FIS selling, we remain reasonably overvalued in relative terms to other emerging markets and to our own history. So from that perspective, right, for DIIs to deploy the cash, any such correction is actually a wonderful opportunity. So they've gone and bought sectors which are not directly impacted by any tariff-related uncertainties. FMCG, for example, and the banking also in the middle recovered a lot. So I think they were parking their eyes closely around this. And final point is that some of the results have started filtering a bit more positively, like L&T's result yesterday. So somewhere the cap goods and the investment cycle, it looks like there's good news. And 80% of India's economy is domestic driven. It's only 20% which is externally exposed. So ultimately for a domestic fund manager, while the tariff is a noise, there is a clear path that with a supportive fiscal policy, a supportive reserve banks, both monetary as well as they gave away a big dividend, and there's a CRR cut due to start shortly. So I think the domestic monsoon has been good. So there are a lot of positive factors surrounding the domestic environment, which domestic fund managers are well aware of, and when there's some correction in good quality companies, those which have earnings guidance which is good, they have stepped in to buy. So it's a combination of all of these things that finally led to, and the markets ended in the red, but at least nowhere close to where it started off, right? So that recovery can be attributed to the actions of domestic fund managers.
Right, Sunil. All right, so those are the permutations and combinations that's led to what we're looking at here, Sunil. But Jonathan, given the aspect of what we're looking at currently and how this is going to unfold, in your opinion, how soon is a breakthrough likely? Seeing Trump's statements and how he's operated in the past with other countries, and what could India and US perhaps settle for?
Yeah, I think it is slightly different from some of the deals we've seen either in some of the smaller Southeast Asian countries, or perhaps the UK and even the EU, where I think probably the European countries certainly did capitulate a little bit. But I think, clearly how this plays out, it's very difficult to predict. Things change at the last moment. Of course, these headline deals get announced, but the actual detail still needs to be worked through, and that's what takes the time. So, it's quite possible some sort of headline deal will be announced, but, it will be probably light on detail, like most of the other deals that have been announced. So, yeah, no, I think it is going to be interesting. I would imagine India is in a better position than I think other economies like Europe, because as just mentioned, it's primarily a domestic story, consumption-driven story. Manufacturing exports and other exports in those areas aren't overly important to the broader economy. Yes, in some sectors they are, but broadly speaking, exports is not what drives the Indian economy. So I think, all in all, there can be a deal, but ultimately a lot of this talk is bluster that's coming out of Washington, and India has a reasonably good hand to play, I would think, in these negotiations.
Right, Jonathan, very interesting points that you have made. Perhaps the fact that this deal is going to be very different from the other deals that have been signed, and most importantly, given the fact that India has stood its ground with respect to some of these, red lines which the United States cannot get access to with respect to the Indian market. But Sunil, let me get in your point of view in terms of what really are investors penciling in so far as a trade deal between the United States and India is concerned. We're given to understand that both the teams are still negotiating. So are you anticipating perhaps some sort of a deal, some sort of an understanding being arrived at over the next couple of days, or will investors have to wait till about 25th August for some clarity to come in?
So I think that I don't think anything's going to happen in the next couple of days, because it'll be a big climb down for Mr. Trump to have announced something and in 2 days to take that back. He has been willing to take it back in the past. Japan is a classic example of his going back, reversing his whole stance. Yes, but I think 2 days is too short a time. So I don't think the market is expecting anything in 2 days. In fact, the market is expecting a 3-phase deal. I think by August 25th talks, maybe by September 1st, after those talks, you'll see an easy things being gotten out of the way. I would call that as a interim deal. And then there will be a phase 1 deal, which will take another 3 months, where a little more difficulty will be tackled. And probably the big key ones would probably take the rest of the year to solve. So it's a 3-part deal. But what India will be looking for, and here is that, I think that they will look for a parity in tariff with our competing countries for the products that we export. So what comes to mind here are textiles, leather, gems and jewelry. Which countries are we competing with? And we will want a level playing field. Ideally, we would love an advantage in tariff with them. But at the worst case, if you get a level playing field, then our domestic industry is protected, because the situation was what it was before. So the levels of tariff, let's say Bangladesh on textiles, or with somebody else on that. So it would be, our attempt would be, give us a level of tariff at which our industry can get a level playing field. I think that would be an easy win from the Indian perspective for which. The second aspect here is buying the oil. I know that Russia is a sticking point, but I do believe that's more of a bargaining chip, because Mr. Trump knows very well that India importing 85% of its oil. If you don't buy from Russia and you can't buy from Iran, then what do we do? So we are in a very difficult situation if we agree to that. So at no point of time will we consider that. But what we can agree to is to buying a significant proportion of energy from America. And there the sticking point will be the increased transportation costs, because Russia is very close to India in terms of geography, whereas American oil will probably need to be shipped across thousands of miles. So there will be a differential cost, and India will seek some kind of a thing, give us a level cost to what Russia is offering. See, Russia used to give us a huge discount in the initial days of the Russia-Ukraine war. But of late, I think, and India was also paying them in rupees, if you remember. But now I think those things have gone away. Now Russia is more or less pricing it closer to a commercial market price. There's still a bit of a discount. But what we would try and get is that we'll tell the US that we can buy the oil from you, but don't give us additional cost for it. So that's one, again, something which I suspect would be an easier to solve situation. And third is a commitment that over a period of time, we will look at American defense equipment incremental to Russia. It's not like we'll stop buying, because we already have over the last 30, 40 years buying from Russia. We need their spare parts and the upgrades on those. We can't just condemn our entire arms and ammunition to the bank sheet and say we'll rely on the US. So we'll tell the US that we will look at buying some advanced defense equipment from you. So these are the ones which will easily, I think, get out of the way. The one important card which we don't have, which is Japan and probably Korea to some extent, or EU or something, is that we can't promise to invest big buckets of dollars in America. Right? We don't have that kind of a money. So Japan promised some $500 billion of investment in America to create jobs. But that's not a card that India has. Yes, to a limited extent, some auto components, auto things can be shifted to US. But we don't have that kind of a bargaining chip of a huge amount of capital we can commit to creating jobs in the US. So that's one of the weaker points in terms of India's negotiation, because Mr. Trump has won that from Japan, right? And the other thing is that Europe, for example, pretty much sold their soul to America, because they have put zero tariffs on American exports into EU and accepted a tariff on EU export. So I don't think India is ever going to try to do that, saying we waive all tariffs on America. So, but a reduction in the tariff on American products being sold to India is very much within the ambit of a negotiation. So I see that, like I said, three-part deal. First part by
and that's perhaps
first week
right. There are, of course, a lot of aspects as to how we're looking at this, but I'd have to interject you there. But thank you very much for putting that into perspective. And Jonathan as well, thank you for joining us on the show this evening. But how that's going to pan out essentially, finally, well, all of us await the same. But for the moment, we are moving on to more that we're tracking, given the fact that while we continue to put the focus on how